Hey guys and girls, I think this one may be, I think this one may be working. So hopefully you guys can see me, hear me on here. Hopefully we're right this time. So if you can hear me, smash up a like, leave us a comment. I've changed to the phone from the laptop. I was hoping to share with you guys some stuff from my phone, but if you can hear me, just leave me a little comment and we will get into thanks Andrea, appreciate that. So much cool stuff to talk to you guys about, so much cool stuff. Apologies about the tech. I've identified that it's my laptop that's being the issue, and it's not the internet. I've tried to do an update on it and it's just not working. So I just threw the phone in the ring. I was actually going to do an Instagram live and a Facebook live at the same time, but we weren't able to. Today, I want to talk about lots of things. I don't know how we're going to go with this, what we're going to talk about, and how this is going to end up, but I am so excited. I actually feel like I am in the start of 2020, right? When the craziness started with lockdowns and all those sorts of things. And yeah, where do I start? Like, I actually genuinely do not know. I do have a MacBook, Lisa. I do have a MacBook, but I genuinely do not know where to start today. I've got so much pieces of paper, things here to throw around with you guys. But if you guys, have been following what I've been talking about for the last at least 5 years, I said we're going to have this thing called a global financial depression. There's only one way out of it, and that's to print our way through, which will cause a hyperinflation. All roads lead to a hyperinflation. And people were saying to me years ago, Birch, you sound delusional. It sounds like what you want to happen, but not what will happen. And, it sounded so foreign to things that I was saying years ago. And it's interesting because it is unfolding, and it's a collapse of our world as we knew it, and the games that we've been played in up until now. But it's exciting, and there's so much opportunity out there. And I'm so excited, like so excited. You can't even believe how excited I am, right? Just interest rates. People are saying start with interest rates, right? Where do I start? I've got so much paperwork here, right? Interest rates, I've said, will go down. Will go to zero, and interest rates will. As I'm recording this, there's a news article just popped up on the screen. It was funny. I've said interest rates will come down to negative interest rates. People said, Birchie, you're full of shit. And then interest rates went down to zero. I said interest rates will go negative. People said, you're full of shit. When are they going to zero? Oh, they've gone up. I said in March last year, they can raise interest rates, right? But they won't be able to get the interest rates over 50 basis points. And they've kept us on 0% interest rates for a decade, right? The interest rates have been almost zero for a decade. And now they decided that they're going to try and increase the interest rates. I said that there'd be a possibility to push interest rates up by 0.25% rate hike, so 50 basis points tops. If it goes more than 50 basis points, the whole system will implode, right? The whole system will implode. And that was 9 months ago. And here we are in March 2023. And wow, right? We are seeing banks implode, right? We are seeing banks implode. We are seeing companies die by the day. And this is, it's bigger. It's bigger than what we're starting to see now, right? And I will continue to make impromptu Facebook Lives. So keep an eye out. If you're not following, make sure you follow the page, not just like it, but actually follow it, so you get into these videos and the notifications while they come out. So I saw someone explain this on the internet, and I'm going to use a ruler here to explain it, right? So banks buy bonds, right? Your loan product, your mortgage is a bond, right? And it's based on however they decide to base it on, right? basically, as interest rates go up, the cost and the spread of the money is less for the bank, and I'll go into that in a moment. But as the rates go up, the bond goes down. So your interest rate or your mortgage is a locked-in fixed sort of product. And a lot of these loans are fixed. If you look at the US, they're fixed for like 20-year loans, 30-year loans. So the loan is the asset of the bank. A lot of people think if the bank goes bankrupt that you have to pay your mortgage back, or you don't have to pay your mortgage back. But if your bank goes bankrupt, your mortgage is still the asset. It's just someone's going to buy it, and it's going to be bought at a lesser value. So if we want to talk about negative equity in properties and whatnot, basically, as the interest rates go up, the cost, someone just said Lynette Zhang, exactly right. As the interest rates are going up, the value of the asset is going down. And let's say that the bank had $1 million worth of these mortgages, right? As the interest rates are going up, the bank is losing the value of your mortgage is becoming lower and lower to the bank as an asset to the bank. So the banks started with $1 million that they borrowed, then rented it out, and now they have to pay a lot more for that money that they've borrowed out. But the rate that you were paying is fixed at whatever the figure was. So the value of the bond or the mortgage is going down in value. Now the banks, that could be worth $900,000, right? So the bank is in negative equity for their position. So where does this all lead us to? I'm going to start with the first thing here. And I did copy a few things here from Lynette Zhang, so forgive me for doing so, but I find her to be awesome and she's really cool. This one here though, this is what I always share with you guys. This is the cash rate futures. This is the basically what they're basing interest rates on, right? You can see there on the top, and I'm going to just draw this just to highlight to everybody. This is the first day in a year that this has occurred like this, right? It's the first time in a year. The orange line there is where the interest rate is at the moment. And you can see, as I said, this would fall sharply and it would make its way back, right? It would make its way back, and you can't push out more than about 3 months and take this thing serious. So this, interest rates went up last week, and now everything has fallen underneath the interest rate. So that to me signals interest rate cuts are on their way, right? Is it going to happen next month? Who knows, right? The faster these banks fall, the bigger these banks implode, the more that interest rates are going to drop. That is just a part of how the system works, right? So I've got here some charts that I borrowed from elsewhere and some other sort of info. But I'm going to get into the first one of these, which is an article here. This is a bit late because I was going to do this video yesterday. I just didn't have the time. This one here goes, the Fed to hold emergency meeting on Monday amid crisis. The Federal Reserve Board governors announced it would hold an emergency closed-door meeting. So that's the news articles yesterday. So the Fed met and they said, we're not going to make a bailout. We're not going to bail any of these people out. We're going to cover it from the insurance. There's an insurance for the bank. So what happened in these banks to get us here, right? Let's just look at this. This is an article that one of our viewers sent me. And this is from a LinkedIn page, right? This is just an article from a LinkedIn page. And I'm going to read through it to just go through the basics of it. Silicon Valley Bank unit economics clarify what happened and frame likely deposit recoveries. 6 points. The basic bank math. Bank takes the deposits and uses those deposits to make loans. So you put your $100,000 in the bank, then they take that, they print more money, and they go lend out $1 million against it. The delta between the interest rate on the loans and the interest paid to depositors is the net interest margin, so NIM. I'm just seeing news articles, they always pop through as I'm doing this. The core metric of bank profitability. So if the bank is paying 2% and they're renting out for 3%, they make 1% profit on that $1 million. But if they're paying 3% and they're renting it out for 2%, they're losing 1% on that. So it's in decline. But not only that, that means that the value of their book is worth a lot less, which means that they fall in negative equity and then they start, going bankrupt, which is basically what's happened. Number 2, bank math at SVB, which is Silicon Valley Bank, one of the first banks. So there's 3 banks that have gone bust straight away, and there's talks of a 4th bank, and if that bank goes under, the whole world is screwed, right? The 4th bank that they're talking, this is just rumors out there, it's in the news, they're talking about it, all this stuff, so I'm not creating defamation against any of these institutions. I actually lost one of the pages that I was going to talk about, but Credit Suisse. If Credit Suisse is going to go broke, everybody is in trouble. It's good for us that's got debt. Before the bank issues, SVB held $212 billion of assets against $200 billion of liability. So they had a $12 billion net worth, right? So let's just think about that. The bank had a $212 billion asset, and they had a loan at $200 billion. So that, if you really break it down, is $12 billion or only 5.6% equity, right? So these are the biggest banks in the world, and you can see how highly leveraged these banks really are. So the assets of that $200 billion worth of liabilities and the assets, so the mortgage-backed securities, which is loans, mortgages, is $82 billion, which is 83% residential property. There is $74 billion in direct loans, and there is $55 billion in liquid assets. The liabilities fell into 2 buckets: deposits, $174 billion worth of people's money that they had in the bank account, but yet only 11% of that was FDIC insured. So it was insured in case something blows up. So 90% of the loan, 90% of the money in the bank was not insured, right? And other debt was $25 billion. So if you look at what happened, the Fed raised rates, making all the long-term dollar debt decline in value, including the assets of this bank. The accounting rules let SVB's mortgage book securities held to maturity, avoiding a hit to equity. What caused the run to happen? The wipeout of the bank's tangible equity cushion was concerning. People wanted their money back, so they asked for their money back, but they never had the money, so they couldn't give the money out. So if you've got $100 in the bank, that's not your money, right? You become a creditor. So you deposit your money into the bank, and then you become a creditor of the bank. And if something goes wrong with the bank, you have to stand in line, and you might get paid cents on the dollar. There's an insurance there which does not cover, right? And we'll get into that a little bit later. So the bank run happened on Thursday. Depositors attempted to withdraw $42 billion from the bank, right? Which math implies $16 billion succeeded. So $16 billion got out, and the bank was sitting there with a negative position of $1 billion cash when the FDIC came in and took over on Friday. Simplistic recovery math, the balance sheet is pretty clear now that given how rapid the event was, the starting point is $10 billion of paper equity. The range of HTM and other book losses is $20 to $40 billion, right? On net, that appears assets by a $10 to $30 billion deficit. And yeah, so that's just a little bit here. So, gonna get, oh, these are fun, right? So, let's read this. This is a Twitter post. This is a Twitter post. There is more than $22 trillion in the US banking system. The FDIC has $124.5 billion on its balance sheet and a $100 billion line of credit from the US Treasury. FDIC assets only cover 1.26% of deposits, about the size of the Silicon Valley Bank. One bank. Let that sink in. So basically, all the money that was in the insurance policy has been used in this one bank, right? So I did borrow this. So those of you that watched that Lynette Zhang, I did take this from hers. So this one here is the amount of money which is in the FDIC. So there's In 2019, there was 1.41% worth of revenue. So if the banks went bankrupt in the US, that there's 1.4 cents in the dollar that you'd get back. And now it's down to 1.27, which is at 1.265 mortalized. So if we want to break that down, right, here we are looking at it here. So it says here, this here is in billions, so it's 110 billion, 128 billion over 10 trillion, right? They're just the numbers that are printed out there. And as Lynette on her video said, here's this other chart, those big purple, green, and blue banks are the largest banks that are out there. And all those little grey bits that are in the background, those little grey lines, they are the little banks that are in the party. When those little banks go that you haven't seen yet, what is going to happen at the big banks, right? And that is where the fun is at. Let's read some more of these. Here's a Twitter post from a Republican person or something, Thomas Massey. Just got off a Zoom meeting with the Fed, the Treasury, the FDIC, the House, and the Senate. A Democrat senator essentially asked whether there was a program in place to censor information on social media that could could lead to a run in the banks. This is a US senator, politician, whatever you want to call him. That guy, he deserves a beer. Good bloke. Don't know who he is. He's sharing that information, right? What does all of this mean to us as just the laymen that are watching the world implode? Does it mean that we're in trouble? Does it mean that we're saved? What does it mean? Well, firstly, it means that if you have money in the bank, we know that inflation is eating that away. So if you're getting a 1%, 2%, 3%, and everything that you're buying is going up by 5%, 10% per year, that means that when you get your money back, you're going to buy a hell of a lot less shit than what you could before you put it away. So you don't want to have your money there for inflation purposes. But it also means that you have your money in the bank, anything over 250,000, and even including less than that, they don't have the money. They don't have the insurance there that they say that they have in place, because it's quite clear that the small little bank, which, let's put it in perspective, the bank that went bust that everyone's talking about, there's 3 that went broke this week. 3 banks collapsed. The SVB bank, the size of that bank, the insurance just covered that one bank. That's a speck in the ocean, but it also is the 16th largest bank in the US, and it is also the 2nd largest banking crash to ever occur, right? But most people watching Married at First Sight, they're not really paying attention as to what really occurred there. If you have money in the bank, it's really bad. I wouldn't have money in the bank. I don't have cash. Every day I spend my money and I buy more assets. They're going to put more cash flow into my pocket. That's what I do. It all turns to shit. I saw this post earlier and I forget what it was. I forget exactly. I don't think I can look into my phone. I'll try to, guys. It's not allowing me. I was trying to find it, but it's basically saying that debt is increasing, right? Why would you want to have cash when money supplies just keeps increasing? They just keep making more of it, right? It's the worst investment ever. So, what is going to happen? I just shared with you guys, those of you that are tuning now, make sure you watch the whole video. This here is the RBA cash rate futures. It has taken a massive reversal. There's been 10 years of zero interest rates. They've made interest rates zero, and now they've pushed those rates up. And they didn't just push them up 0.25% or 0.5%. I said over 0.5%, the whole system would implode. They went ahead and did it. So the system's imploding. And it's not because, anything like that. It's just that's simple mathematics, right? It's mathematically impossible, I've said from day one, for them to be able to go as hard as what they have. These banks are falling apart. They're printing more money. So let's assume that this bank of 300 billion is the only one that blows up. That's $300 billion. Where does that $300 billion come from to fix up that bank? Well, what they do is that they just go to the Fed, they go and print some more money, and they go, it's all okay. That creates more inflation if anyone is not aware of how inflation is created. So they've just printed $300 billion overnight, bank's okay. But then that is one bank out of how many other banks that are out there. I believe this is just scratching the surface, right? I believe that there's dozens, hundreds, thousands of other banks which would be in the same sort of position. And if that's the case, then that means that the whole bond market is going to implode. Who's invested in the bond market? You go down to the pub and ask anybody, they're not invested in the bond market, but they are, because they're super funders, right? And they're just dodgy financial products that are wrapped up into these sort of products. And if you've got cash in your super, you should be looking at how you can protect it. You need to be speaking to people of how you can try and how you can protect it. Your financial planner probably doesn't know shit and will be like, oh yeah, it's all right, it's just put it more into a Vanguard, right? But what is happening out there, no one's seen it happen before. It's mathematically impossible. As they print more money, right, the central bank is issuing new bonds or buying up bonds. They're issuing money into the circulation. That means that more debt is being created. What does that mean? At an interest rate of 5%, it doesn't work. At a bond at 5%, I'll call it an interest rate, call it a bond, whatever it is, at 5%, it doesn't work. It only works at 0.5% or less because the system has so much debt that's attached to it, it's mathematically impossible. So as they're printing out more money, we're starting to see the bond markets fall, right? This is the bond market. This is the 3 months futures, cash rate futures here. This is the US market. The blue line is to December 23, and the white line is till December 23. The blue line is until June 23. So 3 month and a 9 month bond. So as we can see, all the way up, we got to 5.75 and then down to 4.25. That was 1% dropped yesterday. 1%, right? If we look at the bonds, we're starting to see a reversal here on the bonds. So I'm seeing people say it would be good. Birch, won't they just bail out all these banks and everything be relatively hunky-dory? Well, that's what they're going to have to do. Unless they crash everything, unless they let everything just crash, which would be amazing if they did, but they're not going to. If they did do that, it would be great. But the only way to do is to bail out all the banks. And they're not calling it a bailout. They're saying, oh, it's the insurance that covered it. But that's the insurance that covered the first bank. What about the next bank? What about the bank after that? What about the bank after that? What is going to happen at that point in time? They're going to have to bail these banks out or the whole system will implode. Now, the problem is that when they bail these banks out, they've got to go take debt. They've now got to reissue currency into the circulation, and there's just more money being inflated away. And that will cause inflation and everything will rise in value. And secondly to that, as I did the example beforehand with the ruler, as the interest rates go up, the value of the mortgage assets go down. So they need to create more value back in the market, which will mean that they'll have to drop the rates. But the only way for them to do that is that they've got to overshoot and overcompensate what they've already done. And I believe that we'll see them go way into the negative this time. So unlike 2 years ago, 3 years ago, when I said interest rates will go negative, the banking system was not designed for that to occur. Now it is, and banks can go negative. So it will be interesting to see. I'm not saying they are going to go negative now. Anything is possible here, but one thing for sure is that it's mathematically impossible for this system. And the more money that they print to bail out, the lower that bottom line has to be. And it's going to be very exciting because those of you that have cash, you'll lose your cash. And it won't be that you'll lose it from just being in a bank that goes bankrupt. And you might be sitting here saying, well, I've got 100 grand and that's perfectly safe in the bank. Well, it could be safe, right? And your bank may be fine and may not have a problem with it. But when you go to pull that money out, well, first and foremost, you go and ask the bank for 100 grand. They'll treat you like a criminal and you're buying heaps of drugs and weapons and prostitutes, right? That's how they treat you. They want to know everything that you're doing with it. But if you did get your money out of the bank, what are you going to buy with it? Because when you put it in 12 months ago, you could buy a hell of a lot more stuff than what you could, whether it be at the grocery store, at the petrol station, at anywhere, right? And the more cash that they print to bail out the system, and this is why I was happy. This is why I was very happy with interest rates going up, because it does two things. It generates more inflation via everyone pushing their prices up. It pushes the rents up, which ultimately is awesome. And then what happens is it's going to mean that when it does implode and the shit hits the fan, which it is right now, they're going to have to do a lot more to stimulate the economy. So they're going to have to overcompensate to fix up the mess that they've occurred. And it's quite intriguing. Quite intriguing. So they can print as much money as they want. They can bail out as many banks as they want. They can bail out as many institutions as they want. But it's going to cause a lot more problems in the system than what existed today, right? So my thought is that we will, if we're talking about predictions and projections and stuff like that, I'm not trying to speculate what may or may not happen, but I believe we're going to see a lot more banks go bust. And think about it this way, right? If the banks are uncertain at the moment, right? The banks are uncertain. They are not going to be lending money freely, right? As much as what they have. They are going to be more skeptical. So businesses won't be getting access to capital. It means that spending doesn't happen, right? It means that the recession happens harder than what they ever could have imagined. And it means that they have to go and re-inject liquidity in the system. And it takes me on to my next topic, which is a video that I was going to share with you. I'll put it in the Birch feed. If you guys aren't on Birch feed, I'm literally posting stuff every hour in there. So go to birchfeed.com, birchfeed.com. Sign up for free. It's an app, Telegram, you need it on your phone, and I just send out random stuff as I see it come throughout the day that is of interest. And I'm being more active there right at the minute because there's lots of cool news to talk about. If there's not so much news, I won't be sharing stuff in there. But the video goes on to show what companies are connected to this SV Bank. So Silicon Valley Bank, it is, someone just said Birch Feed is mad, awesome, thanks for the feedback. And Katie said for some reason Birch Feed isn't working. I don't know why it's not. It appears to be working for everybody else. You might need to update Telegram or maybe just re-add yourself to the Birch Feed channel. But Silicon Valley Bank is located in the Silicon Valley, and it is a startup bank. So where most of these tech companies don't have money, right? They're really broke. They're a really bad, the website isn't working. If you can't get access to Birch Feed website, it is birchfeed.com, not .au, it's just .com. But if you can't get access to it, email my team and they'll get you in contact with how it all works, and we'll get you on that. But Silicon Valley Bank, it started a lot of famous tech startups. The banks all do business with these companies. Some of these companies are places like TikTok, Airbnb, Etsy, Zoom, WeWork. These companies that are very, very big that are out there, right? Now, if there's an insurance policy at $250,000 for your deposits, and these companies would most likely have more than $250,000 in their bank account, and that bank has closed and people have no access to their accounts, that means that these companies now have got no access to their capital. So if there's another investor wanting to put money into TikTok or put money into Zoom or put money into WeWork or put money into whatever company is affiliated with it, then they may be a little bit concerned about the liquidity of that business that they're investing in. So then we'll have a flow-on effect of what happens to the ratings of these companies, what happens to the liquidity of these companies, what happens when a company like TikTok or Zoom or any of these companies go, well, we don't have access to a capital, we can't make payroll this week, and the staff don't get payroll, right? What would happen on these occasions? Well, then we've got a contagion, as they're calling, which would flow out into other sort of markets, which just aren't, banking markets. They're all business markets and the stock market, then we start seeing these companies start crashing. And I think we're very early days, right? We might be excited now, but this is mathematically impossible. They have to put so much money in the system to fix this mess that they've created. They've created the biggest mess mathematically possible. And as they start printing this money, it's going to cause a hyperinflation. So my thoughts are, next 6 months is going to be fun. I said in March 2022 that we couldn't see interest rates go up more than 50 basis points. If we do, it depends how fast they push them and how high they push them to. It's not going to end well. And I said within 12 months, by the end of this financial year, June, July, we would see something, don't know what, implode, and reversal of monetary policy, which is what is happening right now. So here's another bloke on LinkedIn with a write-up. Silicon Valley Bank was thriving. Credit losses are fairly low. Deposits tripled from 2019 to 21. How's that a problem? It sounds great, right? When banks accept deposits from clients, they owe that client some money. So deposits are liabilities to the bank. Liabilities cost money, meaning that their expenses are there to both serve those clients, branches, tellers, etc., and the interest the bank pays on your checking account / your deposit. To pay for the cost of these liabilities, banks turn them into assets, lending deposits to small business loans, mortgages, etc. If a bank can't lend deposits responsibly, it often uses excuses to buy loans or securities like the US Treasuries and mortgage-backed securities. As mentioned above, from 2019 to 2021, deposits tripled. SVB needed to take those funds and acquire assets to pay for its cost. Much of the dollars was from VC-backed companies that needed a place to deposit the funds until they raised those big deposits. Deposits were pouring in fast to lend responsibly. SVB recognised that. Rather than make dumb loans, SVB bought assets guaranteed by the US government. Right? Now this is where it gets fun. The deposits, they bought US government treasuries, but in the long duration of 10-year bonds. The mistake is when the rates rise, the fixed income prices fall because those bonds they bought are paying too little. Right? So the bonds that they bought were 2%. The bonds that they bought were 25 basis points. They were 50 basis points, but now they're 3, 4, 5%. They've got to pay out higher money to their deposit holders. If they can't pay those deposit holders ask for their money back, and that is where we sit here today with a collapsed SB Bank. So let's have a look at a bit more of it. The duration, a 1% move on a 9-year bond is negative 9% on the bond price. The banks are leveraged though. Remember, the banks generally acquire assets using deposits, liabilities, the capital source. And banks like SB banks are leveraged at 10 to 1 or more, right? So you put 100,000 in, they go get loans and buy bonds at 10 to 1, right? So SVB bought high quality assets, but it bought tons of them with long duration at low interest rates. When the Fed raised rates, those assets declined in value. 1 times duration, but they got 9 times leverage on that, right? So they've got 10 times the amount of losses of what they would be having. SVB now has a mark-to-market hole in its balance sheets. It's just a mark-to-market as long as its liabilities are sticky. The depositors leave their money in the bank, it'll ultimately be fine, but that's a big if. Technically, if all the depositors ask for their dollars back at once, SVB needs to sell those bonds at the mark-to-market value, crystallising what could have been a temporary loss. If those losses are big enough, they may not have enough money to pay out all the depositors. But this situation rarely happens, so once it starts, the game theory kicks in. Nobody wants to be the depositor at a bank. Technically, if the depositor asks for their dollars back, that's the part I just read, which brings us to today. SVB has large depositors. Large depositors aren't fully insured by the FDIC. That's why they want their money back. They have an incentive to find highly sound banks. Once a whiff of issue pops up, large depositors run and you have a bank run. The bank's deposits go in reverse as to sell its assets. FHLB steps in help turn these liquid assets into more liquid. So that's why we're starting to see sell-offs in the bond markets. That's why we're seeing the bond market come backwards, and it's going to ultimately put a pressure on the central banks to cut interest rates. So it's cool. So if we look here at this article, this is just some of the flow-on effects, guys. This is just some of the flow. I don't know exactly what's going to blow the market, but ultimately, you've come here, you've listened, you want to hear, you want to go, why am I so excited? Why is Birch the happiest guy alive? Because I have heaps of debt, right? I have zero cash in the bank. Money comes in my bank account every day. I get rid of it. If my bank collapsed tomorrow, I don't even care, because I'll just tell people money into a different bank. I've got lots of banks to use, and whatever FDIC needs to come in and insure me, it'll be well underneath the limits there. So looking at the flow-on effect from it, we will ultimately see the rates drop, like I've been saying. We'll ultimately see more liquidity being injected. We'll ultimately see, the bigger this mess, the more bailouts that need to happen, the more money that needs to come in the system, the higher the level of inflation. This next cycle that we see, none of these cycles are real, right? These cycles are fake. Right? They're all made up from all this funny money that they've been doing, and it's been happening for a very long time. Normally a cycle would be like a 7 or 10 year cycle, and people say, oh, my property doubles in 7 years or 10 years, and I always laugh at that sort of stuff because I don't know how the fundamentals work underneath it. In 2018, I did a mentoring program. I said all these things that have happened today and are happening in the last 3 years would happen, and it's happened. I actually said that I believe that we'll see boom-bust cycles that will occur in a short period of time, not a 5 or 10 year or a 7 year or 10 year cycle. It would happen in a 12, 18, 24 month cycle. I just saw someone says cycle. And we've seen 12 months ago, boom, inflation out of control. They've tried to control it. It's caused a bust. They're going to try and stop the bust, so they're going to create more currency, and it's caused another boom. But the next boom that we see, in my belief, is that it's going to make things run out of control. They cannot control this now. This is runaway, right? Whatever they do now creates more and more inflation, and it's just amazing. It's just amazing. So who should be worried? Everybody should be worried about a hyperinflation. The outcome will be a hyperinflation, and basically anything that has value is what you want. Anything that's is paper asset or digital asset, you don't want. So your money in the bank, your money in your pocket, is going to keep buying less and less, because they're just going to keep anything that they can keep printing. They'll just keep printing. So this is just, you can start seeing how these things can flow on. So this is an article about Etsy. Etsy is delaying seller payouts following Silicon Valley's bank's collapse. The DIY marketplace is pressing pause on payouts until it can route the deposits through one of its other payment partners, but some sellers feel as if they've been left in the dark. So imagine if here's some other people that use it, like DoorDash, I think maybe Uber uses it, definitely Airbnb, Zoom, all of these companies, TikTok, they don't have access to the money. So imagine you were doing Uber, right? And you're like, yep, I get paid on a Thursday or get paid on a Wednesday. I don't know how Uber pays out. It could pay out daily. It could be like a PayPal. I don't know, right? But you're using one of these platforms, and suddenly they don't have access to their money. So in this case, Etsy can't pay its people that are working on the platform, so it can't pay out. So people for DoorDash won't be able to get paid out. Anyone that's working at these companies as a job won't be getting paid out. So imagine when those people can't afford their mortgage, when those people get behind, when something goes wrong in those people's life, what is the outcome that's going to occur from that? There are all the landmines out there. There's so many landmines in this system right at the moment. And it's all leading to one thing, and it's an economic crash. What should you be doing? I've said for the last year, I've said for the last 3 years, I've said for the last 5 years, buy assets. Doesn't matter, I don't even know what it is, right? Whether it's bottles of water there, whether it's bits of silver sitting around, whether it be a laptop, no matter what it is, buy something, right? I like property because it's got cash flow, it's got debt attached to it. The debt is being printed at a record rate, so my debt is losing its value. It's losing its value, and I can pay it off with devalued dollars, right? That's what I like property for. I like all different types of assets. Anything that's not cash is what I like. So that's my personal view. If you wanted to build a portfolio of 10, 15, 20, 30 properties in your portfolio and you're starting out today, you're not going to be able to build the portfolio in 2 weeks. I know that I sit here every day and say, oh, I've got this client that bought 5 properties and now they're buying another 2 properties and whatnot. But if you want to build a 10 property, 20 property portfolio, that could take a year, 2 years, 3 years to build that portfolio. If we start seeing rates drop next month, or we start seeing rates drop in the next 3 months, that means that we're going to see another boom. If you don't have access to the capital because the rates are too high, your servicing's not working, etc., 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 it's going to take you a while to build out that portfolio. So you could build a portfolio from today in the next 2 years, but the thing is that you won't be able to have that time frame to build up that portfolio. So that's what I like property for. But I buy silver, buy anything, cars, second-hand cars. People are sitting there. I took a video the other day and showed everyone that I've got access to my own food supply. I like having access to my own food because then I don't have to pay stupid prices when they go up. Plus, I don't like the fact that they're putting poison in my food. So that's why I like to have control of what I put in my body. So as we go on to more news articles, there's lots of cool stuff. As I said, those of you guys that are watching right now, I've said a lot today. I literally started this, I had a vision of how I was going to chat today and I was lost for words, right? It's rarely that I'm lost for words. I literally didn't know where to start today because there's so much happening out there, so much cool stuff. And I'm going to do more and more of these videos more regularly. So here's next article here. Silicon Valley Bank shut down. It's stunning 300 billion collapse. So we thought last week that seeing a building company go down with $100 million or $50 million was a big thing. We thought seeing some little retailer leave 150K loss. We're now seeing $300 billion, right? Let's put 300 billion into context, right? The size of the country's debt in 1992 was $96 billion or whatever it was, $98 billion. That's the country of Australia's debt bill, 3 times the size of that in one bank, right? It's the second largest bank to ever fail. That is probably going to be a small bank by the time we get through this and they stop falling. But I believe this is just the start of it, right? This is just the start of it. This one here is old news. It's about the Fed. They put out an article. Here's another article here. Big squeeze, Aussie firms at risk of insolvency as companies collapse across the nation. A quick glance over Australia's top news outlets have revealed terrifying trend sweeping the nation. There is more grim news ahead. Quick glance over blah blah. Industry in shambles, the national builder teeters on the edge. There's a news of a law firm that collapsed with 600 grand in debt, as well as a popular influencer endured restaurant that's in liquidation owing 300,000. The advertiser reporting on shop vacancies with a string of store closures. The Daily Telegraph is concerned with 1,200 job losses after Australia's largest logistic company abruptly folded. And on news.com's homepage, there's more worrying economic news with tech giant laid off 500 workers and a Sydney building company that stopped work on construction site collapsing, impacting 19 homeowners. According to new analysis, there is more bad news coming fast. Digital credit reporting agency Creditor Watch has released recent business risk index revealing that there was a big squeeze from rising costs and falling demand pressuring the countless businesses. It's just inevitable, guys. It's just inevitable. These businesses will keep falling. I said it 10 months ago. I said interest rates go up by more than 0.5%, everything blows up. This one here's the one that I just printed out before we hopped online. This one here is what's to come. What's to come next? What's to come next, Birchie? I'm not saying that this is going to go broke. I could have the lawyers on my phone saying stop saying things, this is defamation, whatever. So just my little disclaimer to their lawyers, they can go get stuffed. I'm just reading from the news here. This says here, Credit Suisse default swaps hit record as SVB failure hits banks. Shares of the Zurich bank tumble as much as 15%. Lenders, investors were already concerned about restructuring. So just imagine you're some rich ass person, right? It's got, when I say rich, like $5 billion in the bank, right? These people that you don't even know about, right? They use their puppets and their avatars out there in the media and that, right? These rich people, and they sit there and they're like, okay, hang on a second. We can move a few chips on the roulette table around here and here and here, put a few bets over here, put a few bets over there. If they have their capital at risk, what would they do with it? They will take their capital out, right? So if there's a bank run on the local level, what's going to happen with a bank run on the large level? Now imagine you had all this money and you had the power. You knew if you had $5 billion in the bank and you just ripped that out tomorrow, that this bank could go broke. What sort of power would you have within the bank? What sort of deals could you be doing at that point, right? Behind boggles in multiple different directions, right? How do these guys operate? What deals could they be cutting? They could crash the bank and then they could put some money back in and buy the bank for cheap, right? It's interesting to see here the word Credit Suisse or Credit Suisse in the news, right? Especially with all this bad news. The cost of insuring bonds of Credit Suisse Group against default climbed to the highest on record. So people are taking bets on Credit Suisse. Why are they taking bets on Credit Suisse? If Credit Suisse blew up, that would be the biggest catastrophic event that's ever hit the financial markets. Don't worry about 1929. Don't worry about Corona. Don't worry about any of the recessions. That would blow out and take out 50% of the markets with their fingers into it, right? Whether it's imagine a business, right? A business that has an invoice for 100 grand. One of those businesses that we just spoke about that went broke, that's owed 200 grand, 300 grand, they've wound up because they've got that. Imagine one of their payers couldn't pay them because their money was in Credit Suisse. What would happen on that occasion? Well, then you'd have the bank that would default, but then you'd also have the business that would be in default. Flow-on effect occurs, right? This is very exciting, very exciting. On that note, like I could be here all night. I've gone through and chopped up lots of articles. You can see here, this here is the bond market crashing. This here is the bond market crashing. This here is your interest rates. They're about to come down. They're going to print. So if we fast forward, I said a month ago, I did some podcasts and Facebook Lives and videos about this. I don't care what happens to interest rates at the moment, right? The more that they push up interest rates, the bigger the mess is going to be. And how do you fix up that mess? That is what I'm concerned about, right? How they fix up that mess is just printing money. They will bail out the banks. They have no option but not to. But when they bail out the banks, they've got to print a lot more money to cover the money that has been lost. And then that will have a trickle-down effect, and that will create more inflation. As the inflation cycles, it snowballs, it is out of the bag, and it cannot be controlled now. So two things are on the card. I said that at the end of whatever happens in 2023 is whatever happens in 2023. But one thing was to be for sure is that interest rates will be lower in January 2024 than what they were in January 2023. That is a given, right? This that is happening, the bigger the explosion, right? The bigger the mess, the bigger the cleanup's going to be. That's going to create another mess. As I said to you guys in March 2020, I did a video and I talked about hyperinflation, talked about things. It's not the problem that is hand that is the issue. You don't have to worry about the problem that is at hand. You need to worry about the treatment of that problem at hand. And every time there's a problem at hand, the treatment is bigger and bigger. And that bigger treatment causes another bigger problem down the track. And they just keep kicking these problems down the track. And they can't do it this time. We're going to see everything go up. Your food, I wouldn't put past me that petrol will be $5 a litre in the foreseeable future, whether it's in 2023, I'm not saying it's going to happen next week, or whether petrol will be $5 per litre, not per gallon if you're watching this from overseas, per litre in Australia. It could be $5 a litre in the middle of 2024. It could be $5 a litre in 2025. Whenever it is, right? But as that petrol goes to $5, you're going to then see the trucks that are driving around to bring you your food and your bottle of water. You're going to see those trucks have to charge a lot more for delivery. And then the seller of this goes, well, I have to put my price up because the plastic bottle has gone up and this and that, and the next thing has gone up in value. It's going to get to a point where you can't actually price anything, and everything just gets whatever price they feel like on the day to protect themselves. That is where we are heading to from this system. And if you have debt, just understand this, right? If you have money, they're printing more of it. It's like, I don't even have a cup, right? But if I poured, if this was cordial in the bottle and I poured water in, I've got another bottle here. If I poured water in this bottle, the more water I pour in, the less taste that the cordial has, the more it gets diluted. Until you're just pissing in the ocean and there is no cordial left in that. That is your cash. The cash you have is getting diluted constantly. The debt is just cash. Money and cash, money and debt are the same thing, right? Because it's debt-based currency that we're using. So as the money is losing its value, the debt is losing its value. But there's more money in circulation, which will push the value of the asset up. Doesn't matter what it is. A pair of sunnies gone up, a texter gone up, everything will go up in value. So if I can take a property, whatever asset, piece of gold, piece of silver, those markets, I'm not even speculating on them. I like them, very invested in them. Whatever it is, your food, you can take that, get some debt attached to it. The debt's easy to pay off. Inflation pushes it up. That's where I see the opportunity. So just my thoughts, just my crazy mind. People are there saying, Puff the Magic Dragon by Birch's farm. I haven't seen Puff the Magic Dragon there, but maybe he does. I might sound like I'm puffing on billies or whatever. But it's just mathematics of what's happening out there. The system could not withstand an interest rate more than 50 basis points. It's mathematically impossible. I'm so happy that they pushed them this high. Yes, it's a bit of pain that everybody's been caused. I said last week on the live, I think it was last week, I said I think that my own personal interest rate has gone up by about $1 million a year. $1 million. Just thinking about that, guys. My interest bill gone up by $1 million a year. Am I happy about it? It's like, the bully on the street, right? It doesn't matter. Firstly, I pushed up my rents on my properties. They've gone up, great. But when it comes back, right, it's going to come back tenfold. So that's very, very exciting. So I'll get to your questions now. It's a bit hard for me to read through all the questions because I'm doing this from my phone. Got a question here that says, what point does all the banks collapse, inflation, etc., start leading us into the CBDC? My thoughts on that, I actually said in the mentoring program in 2018 that we would see the banks crash. And my thought of this is, still remember this because I've said it a few times on these lives as well. As the economic crashes occur, we're eventually going to see the banks die. I actually said the banks would die and they would be bought out and bailed out via their central bank, whatever country they're in, like Australia, the RBA, New Zealand, RBNZ, whatever. I believe that the central banks will have to bail out the banks in the future. And then I believe from the central banks bailing out the banks, the consumer banks that everyone uses, I believe that the central banks will at some point get into a position where they default, and then they'll have to be bailed out via the IMF, which is the International Monetary Fund. And then they will bail them out with a thing called an SDR, which is a special drawing right. That's when the system collapses. And if we look at it from that perspective, I believe that the CBDC will come in somewhere in this next cycle when people are begging for the solution, because they do problem, reaction, solution. They had a problem, someone ate a bat in the other side of the world, and everybody was scared of dying suddenly, right? So they went out and they locked everyone up. They called a problem, a reaction, and everyone was then begging for the solution. And everyone went out and got the solution, right? That's what they do. That's what they do. So are people going to be squeezed that hard? They need to get money from the government. I believe that there will be a central bank digital currency connected to UBI, Universal Basic Income, which I did speak about 5 years ago. Before any of this, no one had even put, you couldn't even Google Universal Basic Income, it wasn't even a thing. That it will be connected to that, where people will be like, shit, I'm broke, I need help, and you'll push a few buttons, you'll sell your identity to the system, and you get your little wallet that you've had to do biometric to your face and align yourself and calibrate to your MyGov account or whatever, and you calibrate yourself, do all that, get it set up, and then they've got you connected to the digital identity, connected you to the digital central bank digital currency, and everyone will be taking part of it. And I believe that's how it will happen. And yeah, someone just said, "Don't eat the bat on your farm." Thank you. That made me even funnier than before. So yeah, I think that we're in for a very exciting time. This is a time to remain calculated, to have an open mind, right? The system doesn't want people to have creative thinking. The system doesn't want people to be, making decisions for themselves. They'd prefer to beat you down and do what they tell you to do. But this is a time where there'll be a lot of people fearful, right? A lot of people watching the TV, right? At the television, right? And they'll be programming you with what they want you to hear. And they will be censoring the things that you shouldn't be thinking, and they'll be taking away your critical thinking. And I'll never forget, I sent a few posts around of this thing that said about never forgetting, right? I'll never forget how people behaved the last 3 years, right? I'll never forget how things will be. And you shouldn't forget, it's been 15 years since we've seen the GFC, right? Literally 15, 16 years, right? People have forgotten what happened back there. I'll never forget that, because that enabled me to retire. That enabled me to break free from the workforce. That enabled me, I was like, okay, how did this happen? And I had to understand, how did I go from a 50 grand, 40 grand a year negative property portfolio? I think most of you guys watching, they've built a portfolio over the last few years. If you did it right, you should be just not making positive cash flow at the moment or whatever, right? Because the interest rate's gone up, whatever. I was negative 40 grand a year in my portfolio. How did I go from negative 40 grand to positive 30 grand and then to positive 80 grand over a 2-year cycle? I had to know about that, right? But people forget. They're like, oh yeah, that thing, the GFC, what happened there? Something about a bank went crash. Like, this is, generational wealth to be able to be built. However you do it, you can be either enslaved for the rest of your life. You could be using this as an opportunity to, the glitches in the matrix to break free. I think everybody should be looking at this with, an open mind and observing the opportunities that are out there. Would I be buying bank shares at the moment because they're cheap? Absolutely not. I do not want anything that is a paper asset. I have zero paper assets at the moment. All assets that I've got are physical assets. The only paper assets that I've got is the debt, right? The debt, because that debt has to be bailed out. This is just the start of it, right? We're seeing banks. If you're a bank and you go bankrupt, things are fucked, right? I can't put it any clearer than that. So if you're a bank and you're bankrupt, everything's fucked. The whole system, if one bank can go bankrupt, all the banks can go bankrupt if they've done what that bank that went bankrupt has done. So just imagine that. If all the banks could go bankrupt, and they may go bankrupt, I don't think they all will, but a lot of them will, then who else could go bankrupt? You never would have thought that your bank could have gone bankrupt. What about the government, right? Imagine the government going bankrupt. I saw a video, it was like on a reel or some shit the other day, and it was of Trump becoming president. And he's like, oh yeah, whatever he does, right, with his hands and shit. And he's like, $20 trillion worth of debt. I'm going to go and fix that. And at that point, I was like, this guy's full of shit, right? I've met the bloke. He seemed like a good bloke, right, years ago. But at that point, I realized he doesn't even know. He's either lying or he doesn't realize the size of the system, right? And I think he knows how the system works, right? He's used it himself. So he said that by the end of his term, you vote for Trump, by the end of his term, $20 trillion, it'll all be paid off, he'll do the right thing. He'll build a wall, all that. Well, everyone was looking at the wall, no one realized that the debt went from 20 trillion to 30 trillion, right? That was in a 4-year period, right? It went up 50% in 4 years, right? So here we are with the debt at 30 trillion, and it passed, the debt ceiling in the US passed from 31 trillion a month ago to 31 trillion 600 already, right? $600 billion before this bailout anyway. $600 billion in like a week or a month, right? The governments will go bankrupt. Fuck my word. And who's going to bail out of them? You'll start seeing who the real rulers of this world are at that point. So, it's my view on it, right? Is the world a messed up place? Is this a time to be scared? I am so excited. I'm more excited today than what I was in 2020. And let me tell you, for those of you who have been watching me for the last 3 years, 4 years, I have never been so fucking excited as I was in February 2020, March 2020. Did I get affected? Yes. I remember looking at my staff and thinking I had to buy 100 fucking laptops at $3,000 a piece, right? To send my staff home to work from home. There was 300 grand just gone, right? And was I impacted? Yes, I was, right? But the benefits that came from that, because I saw what could have been as the opportunities, far out exceeded it, right? What I see now is if this catches fire more than what it has already, that is the biggest opportunity that any of us would ever have for us to make things happen. I've seen a message here from Steve, and I'm just going to try and open it. Steve, you were a part of the mentoring program. I remember that you were, and you would remember these conversations. I would have sounded like an idiot back then, right? My hair wasn't as grey and stuff like that. Like these videos, I'm going to try and see if we can dig some of them up and throw them up just for the fun of it, right? Where I literally said that this would happen whenever it would have happened, right? It happened 5 years later, 6 years later, right? Exciting. Your question is anyway, welcome to the end of the days. There are still things that are trying to get in place to be prepared. Are we a bit too late now, or is there still time? What can we still do to benefit from this? Good question. What can you do to benefit from the apocalypse? Anything, right? The worst thing you could have is cash. The best thing you could have is anything that's not cash. You could have something that's a bottle of water. You could have something that's a bit of food, but then it's a perishable good, so it won't be able to take its way through. Debt contracts are great, and I don't mean going to buy other people's debt, i.e. bonds. It's utilising those bonds, and anything that can be inflated away that's attached to that would be great, and anything that could be inflated away that's physical, not anything that's paper, whether it be those real estate trusts that they have, and anything on the stock market. I would not touch anything on the stock market at all. Getting your own food, mate, you are doing the right thing with your position. What you are doing is great, and I don't want to be sitting here telling everyone, hey, go and buy properties, go get yourself into debt, go do this, go do that, because then I'll feel like I'm spruiking things, right? But just get your shit in order. The things I've been saying: get properties, get debt, get food, get a house, get a farm, get a holiday house, get cars, get whatever you can. If we look back, right, just think about this, right? I think this will sum it up, like read between the lines, be a bit creative for everyone, right? If we were to look at what you can buy today, you go, actually, a Ford Ranger, right? I don't know what they sell for now. I think they're selling for like a Raptor for like maybe 100 grand, maybe a Wild Track for 80 grand. They were like 50 and 60 and 70 grand beforehand, right? A Ford, right? A Ute. 3 years has gone up to those sort of prices. People think, oh yeah, 80 grand for a Ute is okay, right? Just 3 years, it's like it doubled, right? That's just the start of it, right? Sit there and go, oh, imagine getting a Big Mac meal for $5, right? You've been lucky to get the family through Macca's. You take a chick on a date to Macca's now, and it would cost you, I don't know, $100, right? I'm exaggerating there. But imagine when people think you can buy a Big Mac meal for $5, right? You can't even get a cheeseburger for $5 now, right? That's in a short period of time. What are we going to be looking at in 2023 now, 2028, right? Let's say 5 years from now. What are we going to sit there and go, imagine getting a Ford Ute for under $100,000. They're now $500,000, right? You're going to be sitting there looking at things, right? Imagine getting a Big Mac meal for under $250, right? They're now $600 for a hamburger, right? And you may find it's hard for us all to believe and comprehend this, right? I was saying it to my team yesterday because I came in, I was sending them stuff as well. I was like, guys, you got no idea. Like, I'm sure people will be saying, what happens when a bank crashes, all these sort of things. And one of my staff I was talking to, and she said, Sharon said, yeah, when I go to like Thailand or I don't know, it was somewhere. It was an Asian place, Hong Kong maybe. I don't know. It was an Asian country. It wasn't like a Bali or a Thailand. It was a good one. And they're like, it costs like $600,000 in that local currency for a Big Mac meal, right? And it's hard for us to fathom, but our currency is just going to be decimated, right? It's going to be decimated. The more things that they do to push up, whatever move they make, they're going to get killed. It's like, it's whatever they do is going to kill the currency. So having cash is the worst thing. Whatever you're doing that's not having cash is going to benefit you. So I hope that answers. I've got another one here. As you said, bank insurance fund is depleted after one bank. It seems a house of cards now. Saw your vision of lines at the ATMs in the USA. Your predictions of hyperinflation have been spot on. Exactly. So I've been sharing pictures of lines at banks, right? People are literally going to the bank trying to get their money out. Have you noticed that there's no ATMs at a service station? Imagine having an ATM. Here's something to think about, right? A civil war, right? The ATMs, you can only get 1,000 out of a lot of them now, not 2,000. There's ATMs, less ATMs. You go to a suburb, like where I was under the 5G tower at my holiday house the other day, that shopping centre, that suburb, it's a national park, it's at Port Stephens, right? It's up past Newcastle, half an hour past Newcastle, 25 beaches, really cool place. So at Port Stephens, there has been about 70% bank closures, and I mean the whole region that's there. Since the time I've had my place there, like the last 2-3 years, the amount of ATMs and banks that I've seen that have shut, they're just not there. Imagine if there was a war, right? And everybody came with their pitchfork and came to fuck you up if you had what it's about, right? If you had an ATM at your business, at your premises, at your shopping centre, right? That shit is going to need an army near it. That thing's going to get bombed. People are going to attack it. People are going to be hungry. People are going to go on riots, right? Getting money out of an ATM is going to become difficult. And it might seem foreign, but foreign things happen the last few years, right? Foreign things that wouldn't have happened are happening in our countries that are not third world. I think the US is a third world country, but it's a different discussion for a different day. But these are things that could be happening. So the writing is on the wall. It's much harder to get capital out of a bank, much harder to get capital out of an ATM. I've always got tradies that want cash. I've got people who always want cash. I'm always at the ATM trying to get cash out, right? Because I just can't get it out quick enough, and I don't have time to get to the bank, don't have the energy to go to the bank and go and say, and deal with their bullshit. So, be very mindful about that. The insurance policies globally appear to be at about $250,000 per bank. So if it was me and I was uneducated enough to have more than $250,000 cash, right, or money in the bank, firstly, I'd never do it. I spend my money daily, like it goes out, like I get the cash out, it's working for me and it's bringing more cash in for me. That's cash flow, right? But if I did have, 300 grand, 500 grand, $1 million in the bank, I would be splitting that shit up with multiple banks to keep it under that 250,000, and I'd try and split it down to the smallest amount. So spread it out to, if I had $1 million, I'd try and spread 10 banks, 2 different entities, get someone that you care about, that you're married to or whatever, to put it under their account, your account, a business account, spread it down to be the smallest amount to minimize that risk, because who knows what will happen and who will go broke. And as I'm saying that, I actually remember talking about the insurance policies back in 2020 about the banks and potentially failing of the bank back in 2020 as well. So go back and check out some of the old videos, everyone. Did you catch Yellen statement? Yellen is Janet Yellen. She's the treasurer of the US or something now. She used to be the chairperson of the Federal Reserve Bank, the central bank there in the US. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. Very funny, right? So it says there will be no losses, so the taxpayer won't have to fund the bailout, so they won't be increasing taxes because of this, and it will not be taken by the government per se, right? So who is creating, right? So let's just use simple mathematics here. I had 300, let's call it $300. This is to cut all the zeros off, right? Because it is pretty fucking stupid when you think about $300 billion just poof, went into money heaven, right? It died, right? The $300 billion dead, right? Let's just call it $300. I had $300. I got robbed. The $300 disappeared. I'm like, shit, I can't afford food, right? Someone comes up and goes, here's $300. Take the $300, you'll be fine, get on with your day. I take the $300, get on with my day. The riddle is who gave the $300 to me so I didn't have no $300? Someone has lost their $300. Where has that $300 come from? Well, they're saying that it's not the taxpayer that's going to pay it, it's not going to get washed up, everyone can be okay, it's all going to be fine, it's all going to be good, right? The question is who gave me that $300? Right? It could be a friend. The friend gave me $300, right? So did my friend lose the money, or did my friend go and rob someone else and take their money to give to me, and the other person has lost the money, right? Or did my friend just go, I'm going to get the printer from the photocopier from Birch's office, and I'm going to scan 3 green bills and counterfeit some money, right? If that was the case, then in the system there'd be more money floating around, and it would cause inflation. And they say that there will be no associated losses. But I remember when people were sitting here in the start of 2020 and their super fund had $100,000 in it, and then their super fund went down to $60,000. And then last year they were like, oh, no, my super fund's good, it's come back up, but my super fund's got $105,000 in it. And then when I really break it down, I'm like, well, your boss put in $5,000 last year, so you're really just neutral. They're like, yeah, well, I haven't lost anything now, have I? And it's like, well, if you had $100,000 in 2020, you could have bought fucking double the amount of cheeseburgers, double the amount of petrol, double the amount of anything at that point in time. So the loss that will be given by everybody will be inflation. It is the silent tax. Inflation will rip everybody apart, right? I'm concerned about it, right? I'm concerned about the hyperinflation, but I'll tell you what I'm not concerned about is how I'm going to profit from the hyperinflation, right? My concerns about the hyperinflation would be all the people that I care about and love that don't have access to food, all the people that couldn't prepare themselves, all the people that are going to be screwed out of this. It is happening in front of us before our eyes. That's where we're at. Ivan says, as usual, you say things in plain language for all to understand. I try to say it. Sometimes people don't like my swearing, but it's, yeah. Craig said, it is just logged on. Will this be posted for later viewing? Yes, it will be posted. Come back and watch it. If you've watched it, only a part of it, watch the whole lot. There's reasons why I'm very excited now. There's so much opportunity to come from this. I've just seen a question from Scott that asked, someone just said, you took a chick to Macca's, ha ha ha, because I was talking about Macca's just then. But Scott just asked, how can you pay off your loan via hyperinflation? A very good question. This, my friends, I don't know if you've just seen, I've got my shorts, the way there's videos, I've got my floral shorts here. Basically, how can you pay off your debt with hyperinflation? I'll do a little session on this right now. So if you have a loan at $500,000, let's go back. Let's go back to 1990, right? If you took out a loan in 1990, you were paying stupid interest rates, right? You'd be paying 7%, 17%, 18% interest rate. And then as interest rates fell, the market went up because people could still afford the repayment, right? So let's say you had a $100,000 property at a 17% interest rate, you were paying $17,000 a year in interest. But then 5 years passed, it was 1998, 1997, whenever, and your house went up to $300,000. Let's say your house went up from $100,000 to $300,000 in 1998. You'd be like, great, I made lots of money. Well, no, the poor bastard coming in now is paying you $300,000 for your property, and they're getting a loan at $300,000. Just keeping it very simple. At $300,000 at a 6% interest rate, 6 times 3 is 18, 18%, $18,000 a year. So you'd be paying $18,000 a year where you're paying $17,000 before. People are like, well, I'm still paying $17,000, it's okay. But people haven't realized that the money has lost its value at that period of time. Inflation has kicked in and people can still go and afford that asset. So how a hyperinflation would occur, properties only go up because of inflation. If you go back to 1992, you could have got a 6-piece of feed at KFC for $5 or something, right? Everything in relativity with time. So technically, if you're taking out debt in 1992 at $100,000 to buy the $100,000 property, or you're taking out $1 million in 2023 to buy the property, that's 10 times the amount. $100,000 back in 92 was nothing. At the time, it was a lot, right? But now, when you look back, it was nothing. So when we fast forward another 20, 30 years, and you say a house could be worth $10 million, right? You'd be sitting there going, wow, $1 million, that didn't really seem like a lot, right? But then if you could manipulate time and bring 30 years down to a 3-year time frame, the inflation has occurred in a much shorter time frame. So you can take out debt today where it's worth a lot of money, but then when the money loses all of its value, you can pay off that debt with a devalued currency. So my thoughts of it is that, and this is, I've said this for many, many years, when I originally tried to explain hyperinflation to people, is if an average wage is $50,000 and a rent on a property is at $300 per week, so someone's taking home $1,000 a week, they're paying $300 a week in rent, whatever. And I'm sure some idiot will be sitting here going, oh, you haven't calculated tax. I'm using this just for rough numbers here, right? So you're earning $50,000 a year, you're paying $15,000 in rent, you're paying $15,000 in living expenses, you're paying $15,000 in food and groceries and whatnot. There goes all your money. If that wage goes up because inflation hits and you're earning $1 million, you'd be like, wow, $1 million a year, fantastic, right? But your groceries are now, $250,000, $300,000 a year. Your rent has turned to $300,000 a year. Your car rego has gone to $10,000 a year. Whatever the case may be, everything has gone up in value. But you've so if you're a renter, right? If you're renting your property, your rent has gone up with inflation. But if you own that property, that means that you've locked your debt in at $100,000, $200,000, $300,000. So if we go back to all the shit boxes that I bought in Mount Druitt back in the day, I was buying these houses for $200,000, they were renting for $300 a week. And this is why you can still do it today. There's a lot less places you can buy at 200 grand, but they're still out there, right? So it's not too late to do that. There's still a lot of opportunity to go and buy these type of numbers, right? But if you bought a property for 200 grand and it rents for 300 bucks a week, you've got a 200 grand loan, you're getting 15 grand a year from your 300 bucks a week rent, you're paying it off, right? If that tenant that's in there, if their income goes to $1 million and they're paying you that 300 bucks a week rent and their rent goes up and gets inflated, well then their rent gets inflated away to 300 grand a year, right? So if they're paying you 300 grand a year in rent, but your loan is locked in at 100% mortgage at 200 grand, you could pay off your mortgage in 6 months worth of rent. The distance and time that it takes you to be able to get that massive level of inflation, before it's been 30 years, it's been 40 years, it's been 50 years, it's been 20 years, it's been 10 years. If you notice the level of inflation, it's compounding much quicker than what it ever has. When we go through a hyperinflation, there's possibility you could pay out your mortgage with a cheeseburger, right? I say that as a joke, kind of joking, not joking. In Venezuela, the wage is now, this is going back like 3 years ago, before the currency died. It died, but before it died. You were able to earn 300,000 of their dollars per month. But a month later, the eggs, a 6-pack of eggs was 600,000 of their dollar. So literally, imagine you had a hyperinflation and 300,000 for a month sounds great income, but a packet of eggs, 6-pack of eggs you couldn't afford to eat. They were literally stealing the animals from the zoo to eat them, right? I can't make this shit up. It's fact, right? So if we get to that level of inflation, the world's going to be a mess. People are going to be screwed up. People are going to be begging for, please give me my digital identity. Give me CBDC so I can afford to eat. I want to eat, right? That's where it'll get to. So at that point, when the whole currency crashes, there'll be a point to pay off your debt. I ain't paying off my debt yet. There'll be a point when I tell you, listen guys, I just paid out my debt and got no loans. It's at that point you guys should be scared, because it'll be like, wow, Birch is really onto the fact that this reset is about to happen. And I'm not there yet. I'm still in the accumulation phase of debt. In the 1980s, there was this video about, I forget, it was some Slavic sort of country where people, this guy was from. He was like a refugee from the country. I forget where it was. And he said that his family paid off their house with a 50-cent piece, a US 50-cent piece. That's how far the currency had crashed. It was a pretty famous video. I put it out on Birch feed maybe about 3 or 4 years ago when I started talking more in depth about the hyperinflation. But how you can pay out, we need to see inflation. The more inflation we see, those with debt are happy, right? Those with assets are happy. Those that are trying to buy anything, those that aren't into the market, those that don't have, will be the ones that are hurting. So you want to be the one that has, and then you want to be swapping the cash. So there's lots of things that are going to be coming at us. Throw me your questions over time. I will do more and more of these videos. I'll keep doing these videos. So just reading through your comments, seeing if there's any cool questions here from the answer before we go. Birchie, they are selling for fucking heaps. They should sell them, call them daisies, as some days works, some days doesn't. I don't know what that is. Big Mac meals for $5 around 1990. Are you doing a webinar this week? Sorry, I missed the last one. No webinar this week. They're once bi-monthly now, so the first Wednesday of every month. So every second month. So register for that. Just look at Lebanon. Bilal says, case in point. Exactly. Unfortunately, I don't think that people running around with their little flags in Australia are going to get up in arms like those guys in Lebanon have. They have literally gone to the bank with a fucking gun and said, give me your money, give me my money, I want it. They're not robbing the bank. They're not coming in saying, hey, give me all the money, where you put your head down and going to shoot the teller's head off and blow a face apart, right? They're not doing that. They're going in there and saying, give me my fucking money, right? And when they say, give me my fucking money, they're going in there to rob the bank for their own cash because the banks are bankrupt, right? They've been fleeced. Like, you may as well have had a Nigerian prince emailing your great uncle from Nigeria has died and giving you $500 billion worth of money on an email, right? You're going to get answered from the same people because they are the guys at the central banks that are printing the money and stealing your wealth. And, you know, it's happened literally every year, every 2 years. It happens to countries. And they just say, oh, this country, poor things happen. It was a bad government. It was a bad this. It was a bad that. It was a corrupt this. It's a corrupt that. What are they saying here? They're blaming it on a bank. They're blaming it on a bat. They're blaming it on something else. They're stealing your money. It's happened throughout history. And it will happen again. But this is just a point that we are all alive right now and we can capitalize on that. So, Blair just said what I just said, yeah. Brett said tips on getting gold and silver. I like gold and silver. I'm not running out to buy gold and silver. I buy gold and silver regularly. I've been buying it for 25 years or so. I was buying precious metals, before I could even sign a contract. It was like 13, 14. I was like, I'm buying coins. I didn't realize at the time that I was buying collectible coins, but I didn't realize the fact of gold and silver and the importance of it. To probably about mid-2000s, so around 2005. It was Mike Maloney that got me excited by that. But all these gold and silver commentators out there, they all say, oh, when the economy crashes, I'm going to sell all my gold and silver and I'm going to buy a piece of real estate. I think half of them would be dead by then, right? These guys don't own property. They don't own many assets. They just own a few pieces of silver and gold. I see people out there going, I'm going to take all my cash out of the bank and put it into gold and silver. I don't think that's the thing either, right? I think having a strategy, having it as a part of your plan to go, okay, I'm going to buy $100 a week. I'm going to buy $500 a month. I'm going to buy $1,000 a month. I'm going to buy $2,000 a month. Whatever it is, just regularly collect it and accumulate it. And over the years, you'll end up very wealthy, like Scrooge McDuck, swimming around in this stuff, right? But that's my thoughts on it. The benefits of it is great, right? They can't take that shit away from you like they are right now with your money. But the other side of it is that it is heavily manipulated to the downside. I'm very much in agreement of that. You can buy silver cheaper now than what you could have 15, 20 years ago. It does appear as a good buy, but they're artificially suppressing that. The day it takes off, it'll be great, but they've been saying that for decades and decades, over 50 years. So the thing that's negative about it is that you can't generate a cash flow, and it's, you know, it has a place, but it's not the whole strategy. So there's a lot of people talking like I talk, but they don't factor in that you can hedge debt. They don't talk about the fact that the cash flow. You go spend 100 grand on gold and silver, you just got a chunk of rock that's sitting there for you and hoping that one day it'll go up. You go buy a property, for example, you're getting cash flow coming through. You can spend $100,000 and go get $500,000 worth of asset. That $500,000 worth of asset goes up, and there's a whole system around turning that into a Ponzi scheme. So that is, you know, you just got to look at it as a part of the portfolio. And for me personally, I have a day where I probably would sell some metal, but it's only when that hits certain figures. I've got those figures in mind, and it's just a part of my strategy in building wealth. What about if you're 80 years old and have over 100 grand in the bank? What would you do? That is a tough one. I can't give specific financial advice. I'd want to know more about the position. I can't give advice like that, nor do I want to give so much advice on that, because there's lots of variables for someone that would be 80 years old with 100 grand in the bank. I would be trying to spread that risk across a couple of banks, and I'd actually probably be holding it in more of cash at this point in time. But there is variables there, so I can't answer that one. Sorry about that on that question. Clint said, what are the rate movements looking like over the next 24 months in your opinion? I've talked about that tonight. I've talked about it a lot. Interest rates will come down by the end of financial year. I am confident, right? I've put my credibility on the line every little while. Every time I speak, really, I'm putting all my credibility on the line with my thoughts, my views, and what's going to happen. But, you know, for me to say that, I'm very, very confident in it. I've talked about this. I actually did a big speech on this going back in February 2019, the last time that the rates dropped. I'm the only one here. I'm the only person on the fucking internet that's been talking about interest rates coming down, as everyone's been, oh, interest rates can go in. Right? All these people saying interest rates are going to go up. I'm the only person out there that's talked about interest rates coming down. Right? This is the chart that it works from. It's dropped under the current interest rate. Current interest rate is the line there that I've highlighted in the orange. This is the chart. This here I expect to drop down a lot. Over the next few weeks, I expect this to drop down massively. And this is the day that I've been waiting for this to occur, for this to drop down. And then we'll start seeing our rate cuts. I believe that we will see rate cuts in the next few months. And then how low will they go? They could go negative, they could go to zero. They have to go back down to under 50 basis points. So that's my view. How long will it take to get there? I think by the start of next year, we will see them by the start of next year at a 50 basis point or less. So no financial advice to anyone. Don't go make decisions based on me. A few people are here saying that that I'm off my head, but you know, it is what it is. I could be right, I could be wrong, but that's my view, that's my calculations. As for the future after that, we're stuck at zero interest rate. Anytime they increase interest rates, it will kill the economy. But I do believe that us going down so low, we're at a point where the velocity of inflation will just expedite. There will be a point where I do believe somewhere in the next 5 years, let's call it, where interest rates could get 50%. 50%. And that's when a Big Mac meal's $1,000. That's when a 50 grand income's gone to $1 million a month or whatever, right? When the dollar has lost all its value, that is when I'd pay out my debt. But we're not there yet. They've got to crash this economy. They've got to crash the currency. The only thing that's going to get destroyed out of this, all these banks will probably fold. They'll all drop, and then they'll go back up. And everyone will be like, see, it was only a glitch in the matrix, right? The bank shares went down from $100 down to $50, but now they're back to 110 and they're up 10%. So, you know, that's why it's good. Well, they're up 10%, but the currency has lost all its value. You've just been lied to, you've been fleeced, you haven't even realized you've been robbed. And that's what's happened to everybody for the last decade, 2 decades. It's happened throughout history, really, but it's becoming really evident, right? And if you can see it and you can smell it and you can feel it, it's like, fuck, I can see those storm clouds coming. I can smell what seems to be rain. I can see it looks like it's raining just over there. I think there's a really good fucking chance it's going to rain on me in the next 10 minutes. That would be a good observation, right? That is where I'm seeing the market, but people are too blindsided. They're like, oh yeah, I don't want to know about that. That's too scary, right? And that's why they're going to be broke. They're going to be trapped in that system. They're going to do, oh, daddy, please beat me more. Daddy being the government, right? Daddy being the system, right? That is the world that we are in. And opportunities there. Opportunities there. Some people will do really well out at this time. Some people won't. We've just had a cycle. We've just seen a whole cycle in a year, if you really think about it, right? We've seen a boom in start of 2022. We've seen them try and stop a boom, and everyone's saying, oh, we're going to a recession. So markets just in general, I'm not talking property, I'm talking just markets in general. People saying, oh, cars, you can't get a car for 3 years. Well, now you get the car yards are calling you, hey, do you want to buy a second car? Do you want to buy a third car, right? These guys need to hand out the deliveries because people can't afford that shit, right? So we've gone from a boom to a bust to a big fucking crash that's here right now that no one's realized about, with the banks crashing and all that. And then we're going to head back to the next boom, all within a year, and no one's realized. People seem to go, oh, well, I'm going to wait until the interest rates cause a crash. I'm going to wait for this. They don't understand. They don't understand how it works. So take the time to understand what's happening out there. But Clint, to answer your question, I think you answered. I think you know. I think you know me to know what's. Yeah. Be careful. The fly's eyes don't pop out. That's a lot of language. Sorry, I couldn't see there. There's no fly. It's sorry if I flashed anyone from there. Hey Birch, you must be the master of mitigating risk, whether you're borrowing millions for real estate or conducting your 10 or so businesses. How do you train someone to think in this way and take highly calculated risks instead of investing haphazardly? Good question, right? And that's the hard thing. That's a hard thing because I've got lots of mates. I've got my mates that I text daily, right? And they're like, just like sending them stuff, right? I've got people that I've done business with. I've got people that I've had really, really close in my life over the years, right? Like really close. And they just may not get it, right? They're not looking at it from your eyes, right? Like we all have a different experience, right? You're at home eating your dinner. Some might be looking at a hamburger. I've got a nice hamburger for dinner that I'm having. Next person might have a steak. Next person might be sitting there having a soup. Next person might be sitting there eating a chips. Next person might be sitting there eating a bowl of rice. What we're seeing that we're eating for dinner is what is in our vision. I can't see what the guy over in the unit complex is doing there right now. I can't see what the other 100 units are doing over in their unit complex. So people make decisions based on what they can see in their life. So being able to say, this is what you need to do to be the next, to do that, it's very hard. It's like, I'm confident on the decisions based on the information that I've seen and I've taken in and I've absorbed. And that's why I made Birch Feed for, because the information that I'm consuming on a daily basis, I try to share that. Some stuff, I could put a lot more in there. I notice people drop off quite regularly. I don't know if they're dropping off because they're dropping off or if they're dropping off because they don't like what I'm saying sometimes, right? And I might sound a little bit crazy out there. But in my eyes, I'm seeing what's factual and I'm like trying to yell off the top of the cliff, fucking look, listen everybody, right? So yeah, just what you're consuming. Make sure that I only make the decisions that I make today based on confidence, based on the confidence of what I've seen, what I've absorbed, the moves that I've made, the exposure that I've made. Like we talk about all these, we see all these people in the news that are based on this chart of business cycle and bloody spending and loans and this and the next thing. People, real estate agents ask me quite regularly, like, Birchie, how do you know what's happening in my marketplace before it happens? How do you know what's happening in the property market, which is not just calculated from these things? And it's like, I'm looking at so much data, right? I've got 10,000 properties that I can go and revalue today from my finance company. I have litmus tests of people's experiences, and I collect that data just from that information that I observe on a daily basis. So it's from that data, that information that I'm seeing, that I can then have the confidence to make the decisions, because people are seeing it maybe not from my eyes and they may not be able to see the full picture. So just my thoughts on that. But yeah, if you see something and it's calculated, and whenever I make a decision, I'm always thinking plan A, plan B, plan C, plan D. So if the plan A screws up, I'll look at all the options that I've got. I want to make sure that I can still be okay with the worst case outcome. It's like, okay, well, there's a risk, it's been minimized. All I need to do is start with my plan A, plan B, plan C, and so on and so forth. Luke here says, I was in regional Victoria over the weekend and paid $14 for a mince pie and a chocolate eclair at a local bakery. Outrageous. Exactly. I was out buying some plants actually the other day, just for my garden, not any funny plants people like to say around here. But I was out buying some plants and I had to go get some cash. Once again, I had to find an ATM. Saw a bakery, saw that there was some pork rolls over there, the chicken ones, the chicken, load me up with lots of chili, whatever. I saw this little sign on the window, right? I was with one of my mates and I was like, hey, check this out. He goes, due to inflation, due to supply chain shortages, our cost of our food is going to go up 20% from this date. And I was like, poor businesses, right? Like poor businesses, like it's making the difference of 50 cents, 80 cents, $1, right? It'd be screwed being in business, dealing with stuff like that. And yeah, it's just that you might feel outraged, but it's that's nothing, right? Imagine when you're paying $50 for a meat pie. Imagine when you're paying $50 for a burger. A lot of people are nearly paying $50 for a burger already. That's just inflation, and it's going to get a hell of a lot worse. Will there become a time to stop buying property because they are inflated beyond value? When will that be, in your best guess? That's a very good question, Steve. That's a very good question. There will be a time that I would stop buying anything, really, because it's just beyond value. But until you can not see value in it, keep buying. So for me, would I be buying in Sydney? I can't physically see possible to be buying in Sydney. Like, let's say I go and buy a Mount Druitt house for $1 million, right? The people that are buying into that market to push it to $1 million, they're at capacity. They've been stretched to the max. They have to have something. There has to be something for them to be able to push the market up. For me to be able to go, okay, the risk isn't there for it to go up. So when I was buying properties in Mount Druitt for 200 grand, I was like, wow, these things are really affordable. They're good buying. There's good value here. But now I don't see it. In some areas, I could look at 10 minutes away from Mount Druitt and go, you could buy 5 acres for $2 million. Well, I'd rather spend double the amount of money and get 10 times the amount, 40 times the amount of land for it, and there's a potential there to do, but that's not my game to go and do those things. I did that years ago. There's markets out there still, and we know those markets, Steve, which we're still buying in for 200 grand, for 150 grand, those sorts of things. There's still a lot of value there. There would become a point. I think when the minimum price, when I start putting out, hey, I've got a cheapie for $1 million, right? Instead of me saying, hey, I've got a cheap property for 50 grand or 100 grand, that is probably the point. You'd be like, fuck, like these things don't have value. But if people are earning $1 million a month because the currency's been devalued so much, well then $1 million still might seem cheap. But it's all relative to the amount of capital and liquidity that's been injected in the system. I think that now is probably better than being in 1992 in one aspect, because there's just a lot more debt sloshing around the system and inflation is occurring a lot quicker than what it did back in 1992. I think it's better buying in 1992 because you'd have a lower entry price, so the debt would be a lot easier to retire than what it would be for someone today. So there is pros and cons, but there would be a day, I do believe there would be a day, and probably be the day that I would pay out my mortgages would be the point where I'd say, I think things are too expensive. So I will share with that when I feel that is the case, but for the moment, there's still lots of opportunities out there, and there's lots of markets which I don't want to participate in because I don't see value. I don't see value in buying a house in northwestern Sydney with no eaves for $1.5 million. I don't see value in a house that was listed in North Kellyville that sold for a record price at $3.5 million, right? North Kellyville, for those of you watching, is, I'm in 2153 here in Bella Vista. The 2155 is a couple of suburbs over. $3.5 million for a house with no eaves. I'd want a castle for $3.5 million, right? Not a house in a new housing estate, because there's no value to be had past that point, in my view. So I hope that answers that question. I'm going to use all my money to buy donkeys when the whole economy collapses, because people will need my donkeys to get from A to B. Pretty much. Money GPS is saying the exact same thing. You came here for the truth, so let me unveil that for you. If you watch Money GPS, you know that that's the thing you always used to say for the last 10 years. I like the Money GPS, and he's good. I've got some of his books as well, Dave over there. So, Clint goes, I'm max servicing backing this in. Well, look, everyone makes their decisions based on what they do. I know that you know that what is happening out there, but you know, I don't disagree, right? I think that that's a very wise move, and I think that when you look back in, like, you would see in your industry what's happening out there, the people will be scared, not taking advantage of this opportunity. Time is going to show. Time's going to show. In 5 years' time, as I said beforehand, you'll be sitting here going, shit, I could have bought a Ford for under $500,000, there will be that point. How quickly will that be? I don't know. But the more injection they put into the system, I'm not scared of hyperinflation. I'm immune. I've had my 6 booster shots. I'm going to smash up a like on that one. I don't know how to smash a like up on my phone. Here we go. Gave you a like. Good work, Daniel. Toby loves the lives of Birchie. Thanking you. Smash up a like for that one. If you do like what I put out there in my videos, I think I do get censored a lot nowadays. I am at detriment to my business with a lot of things that I do say because they may be controversial. But I do know, and I back myself because I'm confident, and I'm making the same decisions as what I say. The decisions that I'm saying and the decisions that I'm making, you either follow me or not follow me, that's cool. But I do get banned and shadow banned a lot. So if you can share with your friends, your family, if you like what I say, tag them in here, get the word out there. That would be much appreciated. Daniel said, one thing's certain, you've gone grey quick. I wouldn't say I've gone grey quickly. What has happened with my hair is I've let it grow out. So I normally have it gelled up and it's much shorter. That's why I get my hair cut with a 0 on the side when I get my fresh cuts. But I wanted to lose some weight and I wanted to cut my rat's tail off, which is drawn quite cool there. I hate the rat's tail and I want to cut it off, but I'm not going to cut it off until I go down to 99.9 kilos. So I'm leaving my hair until I can get to that point. So it's just pushing me that little bit harder. And because it's longer, you can see that it's got more grey. I haven't been painting the house. I haven't been sanding or anything like that. And yeah, I've had the grey coming on. Since I was 16, I had this little patchy, but I've had it coming on for many, many years. This is your moment, Birchie. It's always my moment, right? I have fun in life. Trent, Birch Feed is awesome to keep up with. Thanks a lot for the feedback. If you are watching these videos, you like my lives, join up the Birch Feed. It's free. You don't even need to worry about hyperinflation there. I don't sell shit in there. I just throw things out there. Occasionally I'll say, hey, if you need help, reach out to my office, but you can just ignore that if you don't want to do business with me. But it's free. I'm just sharing my thoughts and views. I'm not putting it out there in public. I'm not sharing you don't go to my Facebook or my Instagram wall or the B.Invested wall and see, links to all these things that I've been watching all day. I just keep it in the Birch Feed. So yeah. I think this is the moment that Ratty needs to go. No, we'll keep the Ratty until I lose some weight. Birchie for PM. You couldn't make me commie enough. Maybe if I had 10 boosters, maybe I'd be compliant enough to be there, but I would never take that on. I feel apologies for all those poor sods. Julie said everything's up already, 33 to 50%. Just keeps going up. Just keeps going up. And that's inflation. Matt says, sign me up for a strategy session, Birchie. If you do want to have a strategy session, there's a link somewhere on this. Click the link and you can book in to speak to one of my team and book in for a map session with myself. But yeah, just somewhere on the link here, wherever you're watching it from, there's a link there. Book into the diary, have a chat with one of my team. You can contact us 1300 367 925, email us at admin@binvested.com.au. Rob, would you ever buy Mackay, or would you rather have a king cobra bite your nips? I've never had a king cobra bite my nips, strangely enough, but I like buying everywhere. So Mackay I buy in, everywhere I buy in. So I've literally got motels. So some people don't realise I've bought motels over the last 2.5, 3 years now. I think it's going on 3 years. 30 motels that are sprinkled all the way up far north Queensland. Every half hour you can stop into one of my venues. So yeah, I like all of that area at the right price. Good to see your noggin. Thanks for checking in. I appreciate that. Matt said too expensive to get a haircut. No, I just explained that one. What's this here? Highlighting your point on affordability and value. The 10 properties I bought in Queensland across 2022 have gone up 15 to 20% and rent 30%. But Central Coast real estate has gone down 15% during the same period. The only difference I can see is that there was more capacity to spend on the Queensland, where the consumers are maxed out around Sydney. Exactly. So it's not what people are going to, everyone's like, oh, my area is the best to go and buy, and they're going to put a new train and an airport and all those sort of things. It doesn't matter. It comes down to, I think the day that it occurred, the penny drop for me was about 2006, maybe 2006, maybe 2005. It was about 1920, say 2005, 20. I realised that it wasn't a property game. It was a bank's game. If the bank can't give you the money, you can't do a deal. So if you can keep the bank happy, you can buy more property. So it's a matter of attaining the finance and the capital to obtain the asset. If you look at all these big companies, the biggest skyscrapers in the world, they're banks, but they're using, even the bank, we can see now that the bank is in debt and their debt is not working, so they're screwed. That's why they're going bust, which is why we did this video. But it's a bank's game, and you need to understand how the banks work. You need to know the movements of the banks, and basic servicing on properties. People's wages can afford servicing at a 200 grand price. Most people's wages can service that all the way up to about $1 million, but at $1 million, people cap out. So if you're picking up something for 200 grand, there's a lot more upside for it to potentially go up than something, say, at $1 million. The chance for that to go from 1 million to 5 million is much more limited because the wages don't allow for servicing back at the bank. So if you calculate how the bank works, you understand what happened in the back of the bank. I think from so much data that I've seen there over the years, with so many deals, so many loans, so many clients, so many different exposures, I could literally guide someone through a bank and say, okay, this bank's this bank's serviceability, that's where you're going to get stuck at that bank. Literally, it's a banker's game, and that's why you've seen so much growth on your properties there. Rob here says, Birch feed has been awesome, loving it, keep it up. Thank you, mate, appreciate that. Mark says, higher protein, lower carbs, Birchie, rat's tail will be off in weeks. Correct, but I go to the gym and I spend like 2 hours a day just pushing out the weights, and my muscles are growing bigger, so that's why I'm there. Best thing I did back in 2015 was a strategy session. Thanks, Clint, appreciate, mate. Rodney says, love the feeds, thank you. Adam says, how do I get my wife as interested as I am with this stuff? This is a good question. I get asked that one a lot from people. How do you get your spouse? Tie the goals back to what they want would be a good suggestion. So what do I mean by that? If you can sit there and say, let's go buy some property, right? But what are you buying the property for? Are you buying the property because you want to have a trophy to put on the wall? Or are you buying the property because you want it to build you cash flow so then you can retire from your job? So if that's the case, and find out what does your wife want in life and how can it benefit her by her having the properties. If you can show her the strategy, show her the plan on her joining in and on board with your goals, well then she's going to be invested to make sure that you together as a couple can be able to do that. And I think that's probably the most important part. But as for getting her interested in the banks crashing and all that sort of stuff, I think if you get her excited about all the other stuff, then that would just be a natural natural flow on from that. Adam says, man, this fascinates me so much. I want to talk about it every day, but it seems like no one is interested. You've got 4 likes on that. So it seems like a lot of people feel on your same level. But, that's why the elite are so small, right? That's why there's, so little people doing so many things, right? Because there's not everyone doing it. If it was easy, everybody would be doing it. People are distracted by the whine and the noise and the, watching the show that's going on, to take time to take a vested interest in their own well-being. And I think no one's going to take more vested interest in their own well-being than yourself. Wow, you've just got 7 likes on that now. Everyone agrees with you, right? So it's up to you to make those decisions, make those choices, go seeking, go searching. If you're unhappy about something, the world just says you got to deal with it, right? It's the way it's going to be. No, if you're not happy with it, make the choice, make the decision, make the change yourself. So that's why I think it's important. And you got 9 likes on there. It's like, the coolest comment I've seen here. You need to talk to like-minded people, Lisa says there. So exactly as well. Find people that have the same sort of interests. Talk to them about it. I've lost lots of friends over the years, and there's lots of people that I care and love for, but I just can't have the conversations. And it's still cool to hang out and, you know, I'd normally have a drink with someone of that, but I don't really drink. But, you know, it's cool to still hang out and talk some shit, but you know your level of conversation that you can have, because it's not worth having that other conversation with them. So find people that you can communicate with, that you can. There's lots of people out there. There's people who you smash up your like there because they are feeling the same thing in their own life. So, yeah. So someone said here, there's heaps of property Facebook groups in the network. There is. Be careful that you don't fall in the traps of those groups. I've seen them over the years. I was on forums for many years. There's lots of people out there that are on the keyboard that don't actually own assets. They might own one property or two property, and they think they're an expert because they've searched everything, they've researched everything, they know everything about everything, but they haven't taken the action, which they don't know anything about because they haven't taken the action. So it's be really cautious on that front. Leon says here, what would be your exit strategy once hyperinflation hits? Now, there would be a point when hyperinflation hits that interest rates will go up. As you can see, they keep trying to increase the interest rates now, but they can't. It's a losing battle. There'll be a point when the currency is about to collapse. We're now seeing the banks going broke. Next step is we're going to see governments going bankrupt, and then we'll see the central banks going bankrupt, and then we'll see a rollout of a new currency from new central banks, which I believe will come in the CBDC format. There'll be a point where I think interest rates will go up straight through the roof, where they will not care, and I think it'll go like 50, 60, 70% interest rate, and it'll just be to suck all the excess off the top of the market. At that point, I would sell off an asset, hopefully just sell one property to pay out 200 properties sort of thing. So yeah, that's just when I see it, but I don't feel like we're there. I think we're there later on this decade. I don't think we'll survive this decade without seeing that position occur. So Rob says, thanks Birchie for the information, inspirational listening to this while painting a house in Moree. I just sold a house in Moree the other day, but it was renovated. It was one of the ones that I bought years ago for like 20 grand or something like that. So have fun in Moree. Matt says here, hey mate, when are you touring Oz to film your motels? Hopefully soon. Maybe next month or so, I might go up to Queensland just for a little bit, right? Just for a little bit. I want to spend, I'm doing Birchie's big lap. Going to be checking out all my motels, got a big caravan, got a big truck, got it all set up, all good to go. But just the timing is the issue, because I've got so many renos and stuff like that going on at the moment. But hopefully very, very soon. But I will be doing some short little trips over the next month, 2 months, going out to my farm, going out to check out a few other things. So I will share with you guys somewhere on social media what I'm doing and all that sort of stuff. So on that note, guys and girls, I could sit here all night. I was so excited today to share with you that the apocalypse that is happening out there in the banking world. If you're just tuning in now, make sure to go back, watch especially the start of this video. I feel like I wasn't on a roll at the start of the video because I actually was lost for words. I was like, there's so many things that are happening right now, which is just to what I'd calculated to occur. And there's going to be lots of news out there. There's going to be lots of mopping the floor with this stuff, lots of blaming, and lots of things to be scared about, lots of things to be excited about. I think everyone is holding a mortgage. People that have set themselves up right will be benefiting very much so out of this market. Is it going to be benefiting you by buying bank shares? I have zero interest in buying those things. There's lots of other ways, and I might do some videos based on the community's feedback as to what you would like me to answer in this time. I will go back through that, and if you've got questions or want me to do specific topics, I'm going to be filming on Thursday this week, so I might do a whole pile of videos based on what the community wants. So keep the questions coming. I'm going to go to the gym now. I'm going to do a couple of hours smashing out. I'm going to get my 20,000 steps for the day, and soon we'll see the head get shaved, the ratty go, and move on with life. So have a great day, and keep being awesome, and keep your mind, keep questioning everything that is out there. Catch up soon. Bye for now.